Who are the three types of NFT buyer personas? What type of marketing material do they resonate with? And how do you position your brand in a way that resonates with them? That's exactly what we're going to be talking about in today's video. And I'm going to be showing you two ways that you can filter your community to further curate the type of buyer persona that you want to attract into your NFT project and create the community that you want to build. And if this is the first time we meet, my name is Leon Aboud, and I'm the founder of Unfungible.xyz. Over the last close to 3 years, I've had the opportunity to work with over 120 of the top Web3 brands, including Forbes, brands including Brave Browser, Pixelmon, and Pixels. And I make these videos to democratize access to effective and ethical Web3 marketing knowledge. Exactly a year ago, during the summer time of 2023, I woke up one morning with a new Calendly meeting booked on my calendar. This was a meeting with a new team that was launching in the NFT space, and they were not yet to even have the X account for the project live. What they were looking for was guidance on how they should execute on the go-to-market strategy for their NFT project to have a successful launch. And during the process, we did the exercise where my team and I shared with that team who are the different types of buyer personas and how can we position that specific brand in a way that attracts that buyer persona, speaks to them, and retain them. Fast forward a couple months, this project ended up becoming the largest NFT launch of 2024. The project you may know and you may have heard of is called Persona. And they were able, in a market where almost every single NFT project was failing to gain traction and failing to raise money off their mint, they were able to launch and raise over $5.5 million, with today having a very healthy community built around their project. And what we shared with them is that at its core, there exists three types of NFT buyer personas that we can target. The first one of those is called the X collector. And what drives these types of people is the sense of exclusivity that comes with investing and becoming part of an NFT community. They seek a sense of belonging that comes with each community. And what they are after is collectability. And as we're going to be seeing a little bit later during this presentation is how do we position our project to speak to them specifically. I want you to think of X-collectors as a little bit more adult, mature individuals. Oftentimes people who work in creative fields in the Web2 space, they have very successful professions, and they are in the NFT space, they are in the Web3 space to get that sense of belonging. They believe in the technology and they are looking to collect digital artifacts in the NFT space. The second type of buyer persona that exists is what we called Finny, which is also known as smart money. The reason why we internally call that second persona Finny is because Finny, you can think about Finny as someone who is in their mid-20s to late 30s and works in the fintech industry and are part of Generation Y. The reason why they invest in the NFT projects that they do is because they are after status. They're after the long-term upside. So they come in with an investor type of mentality. They're looking for the potential plays that could create long-term financial upside. And they are in it because of the network. They want to surround themselves with other high achievers, other high performers, and they want to build that strong network that is going to allow them to achieve their long-term financial goals. And the third and final of these buyer personas is Z Money. And you can think of Z Money as the degens. These are the people who are in the NFT space for the quick flip. They are attracted by the hype. They're attracted by the volatility. They're attracted by the fast-paced movement that comes with the Web3 space. And they are very much narrative driven. You can think as Z Money. The reason why Z is because they're part of Gen Z, younger individuals, oftentimes from third world countries. And money is because they are in it for the return that can come with their potential investments and them buying into collections or assets. And there's a little misconception that, or a belief change that I want you to develop when it comes to buyer personas. Buyer personas have a level of fluidity to them. I know a lot of people who fit within the intersection of the two. However, as humans, as individuals, most of us often lean more towards one of these three buyer personas. Although you can have 80% from one and 20% from the other, you will typically, as an individual, lean more towards one specific buyer type. I'll give you a very simple example. If you're a coffee drinker versus if you're an energy drink drinker, I know people who only drink coffee, and I know people who only get their source of caffeine from energy drinks. But it doesn't take away from if a coffee drinker one day, me for example, I'm an avid coffee drinker. If one day I get myself an energy drink, doesn't make me all of a sudden a 100% energy drink buyer. There's that in between. However, I still lean more towards being a coffee drinker type of person. You can think of that example with coffee and tea. You can think of that example with most industries that most customer behaviors that we engage in. Same thing with degens. Most degens, what they do is they buy into collections to have that quick flip. They're not looking to hold collections, but doesn't take away that all you need is the right product with the right branding, with the right messaging to all of a sudden resonate with the degen and make them believe in the long-term future of that specific product. However, if you are to look at that person's on-chain behavior, you're going to notice a certain pattern that they follow again and again and again and again. And that is that of a degen, that of a Finny, or that of an ex-collector. So the question now becomes, how do we create an ex-collector friendly brand? And we're going to go through that exercise with all three of the different brands. So as we saw with the ex-collector, is they're looking for that sense of exclusivity, that sense of belonging, and that sense of collectability that comes with the collections that they buy into. So the goal with having a community that resonates with the ex-collectors is, at its core, the community needs to have a sense of exclusivity. Ex-collectors are a lot less likely to buy into 10,000 NFT profile picture collections. They lean more towards a very small supply, very exclusive. You could think of ordinal maxi business communities that utility is not the main value proposition. What is the main value proposition is the community or the collectability that comes. The second trait of a project that is friendly to the ex-collector is a strong origin story. CryptoPunks is a perfect example of that, with CryptoPunks' historical relevance that makes it a great collectible element. We have Ordinal's Maxi Business, which was the first big established Ordinals collection with a strong community being formed around it. This is not a community that people invest in it for the utility. It is not. Another great example of that is Forbes Web3's NFT collection, who recently launched, and they were able to raise a couple $1 million from that. With Forbes, it is a soul-bound token, which means that it is not tradable on the secondary market. The reason why people bought into Forbes is because of the origin story, is because of the brand credibility that comes with you being part of the Forbes collection. It is the high perceived value that you gain with you being part of that community. And of course, it is the incredibly well-curated community that Forbes was able to nurture during the launch and marketing process. Another brand that we've had experience working with, especially on the Twitter Spaces side, is Live Art. For those of you who don't know, Live Art is an art marketplace, not too dissimilar from Artsblock. And I was having a conversation one day on Twitter Spaces with the CMO of Live Art, and she mentioned how what is the most important element of a successful drop, it's not the quality of the art, it is not the aesthetics of the art, it is the story behind the artist. And the ex-collectors are the types of people that resonate with the story, that resonate with the artist behind the actual project. Less the utility, less the long-term upside. They want to collect things that they deem valuable. So this is what an ex-collector friendly brand looks like. For a Finny friendly brand, so smart money friendly brand, what does that look like? I want you to think of Finny as an investor in young startups. And the way you get Finny to pay attention to you is you need a proven team to be behind the project. Teams that have a wide experience of building brands and startups, either in the Web2 space or in the Web3 space. They're looking at a strong vision, a vision strong enough and big enough that the Finnies are going to be willing to get in on the ride. They love when there's an already existing MVP on the market. So the brand that they're investing in already has a product live that already has some form of traction, user base, and product market fit. And number 4, Finnies love when there is a third-party approval that comes with the brand. What is third-party approval? It is a big name backing that specific collection. It is having the Animoca brand. It is having the Binance-backed ecosystem. It is having the big influencers and thought leaders behind the project. Because what this tells you is there is more than just the short term as part of the project. Binance would not invest in a project if it was just here for the 6 months. Third-party approvals are very good for brands that are looking for that. And as you can see through that lens, examples that we have here are number 1, persona. They check all of these elements. Legit. They check them all. All the team members at Persona are ex-Ubisoft, sometimes high-level decision makers inside of Ubisoft. Strong vision. Persona came in to help reshape the future of digital identities. Number 3, MVP on the market. Persona is actually a project by this mother company called Unagi. And Unagi had one of the most successful games on the BNB chain. So they had one of the top 10 games by volume on the BNB chain, which was a fantasy sport type of game. And number 4, third-party approval. Persona are backed by Binance and have a big resume of a lot of big projects and big brands investing in them. So you can see another example of a project that we've worked with is Everreach Labs, who have also all the same. Everreach, the reason I put it here is because they are an NFT project that is mid-launch. So they're about to launch in the next coming days. The moment you watch this video, they're probably going to be live on the market. And just like that, they also check all the boxes. Mad lads with the founder, Mad Armani. Great founders. They had a wallet live even before the launch of the NFT collection. And The Beacon, another project that recently launched, raising over $3.3 million on their NFT mint. They also check all the boxes. So you can see how having all these criterias is what makes Finny bullish on your project and is able to get you to attract that type of buyer persona that has a little bit deeper pockets and that is willing to invest in your brand for the long term. Now, number 4, Z Money. What are the types of criterias that Z Money looks into? The first one is narrative. As you might know, Web3 is very much of a narrative-driven ecosystem. A couple months ago, we had gaming was hot. Then we had AI. Then we had meme coins. And then we had new chains popping up. Z Money is very good at following narratives. Because of their young nature, them having a little bit more time on their hands, they have the ability to quickly adapt to new narratives and quickly adopt the new chains and the new tools that allow them to trade on chains. So they are the people that move the liquidity from chain to chain to chain. They are attracted by social proof. When they see a lot of people paying attention to one narrative or to one project, they typically tend to flock to that. So they flock in herds together. And number 3, they resonate with strong lore and strong storytelling. I was recently on a Twitter Spaces with someone who specializes in studying meme coins. And one of the things that he mentioned about the strength of a meme coin is just how good is the meme is one of the key factors of how strongly a meme coin is going to perform. And we've seen this with the top meme coins, whether it's Pepe, whether it's Shiba, whether it's Mog today, whether it's WIF. These all have very strong storytelling, very strong lore, and a very strong community that was built around that. A couple examples that I have for you specifically for the NFT space. And this is something interesting before I get into this. As we speak right now in the NFT space, in the broader NFT ecosystem, the 2 main participants that are still active are the ex-collectors and the Finny. Z Money, considering that they flock where returns are easiest to find, have flocked to the more volatile, more liquid markets, which are meme coins, which are tokens. And right now, most of Z Money is trading meme coins. They're trading all the celebrity coins. They're trading all these new narratives that are emerging. If you are here today, still watching this channel, you know that NFTs are not the current narrative that is hot in the market. So the two main participants are X Collector and Finny. However, we have seen instances with Z Money returns on these new emerging narratives. So with Blast, for example, Blast, when they were doing their airdrop campaign, the way they incentivize people to be active on the platform, on the chain, is by incentivizing bridging to Blast, by incentivizing people to engage in the different marketplaces on the different ecosystems built on top of Blast. And one of the things built on Blast was Blur, and Blur is an NFT marketplace. So we saw a big rush of NFTs built on Blast or launched on Blur. So what people were doing is they were trading NFTs on the Blast ecosystem using Blur as the main marketplace. And that's when we saw a lot of Blast NFTs just like run through the moon, 1,000x return. A lot of it was wash trading. A lot of it were people just farming for the token. But that's a great example how even in NFTs, we saw Z Money coming back because this was the narrative. This was where the attention is. This was where people were flocking to. And this is a great example how Z Money moves with the narrative and where all the other attention is flocking. Now, from what we just saw, the three types of buyer personas and the three types of projects that they resonate with. So the X Collectors, the Finny, and the Z Money. Now, as a project yourself, the biggest mistake you can do is to try to tailor for everyone. Because the moment you start to try to speak to everyone, you speak to no one. Imagine you're at the metro station and you stand there on a box and you try to scream, everyone, everyone, everyone. No one's going to look at you. But imagine you get up on that box and you just scream, Mike. You're going to get a couple people looking back. All the mics in that room are going to look at you. And that's exactly the beauty of understanding who these buyer personas are and how do we tailor our marketing message to them. So depending who you are as a founder, what type of project you're trying to build, what is the chemistry of your project, double down on your buyer persona. Double down on your messaging. If you're trying to attract Finny, show them all the things that they need to see that you are a long-term play, that you are a long-term project that has the ability to grow long-term and to carve its name in that growing marketplace, that growing industry, which is Web3. If you're going for X Collector, double down on the origin story. Double down on why did you create what you created? Who is the artist behind the collection? Who is your community made up of? And why should you join us on your journey to find a sense of belonging, a sense of community within the NFT space? And this is where I want to share with you 2 levels of filtering that you can create to further filter as you are launching your community. Because even though your marketing message is well tailored, you are still going to be attracting people from the other 2 adjacent buyer personas. And that is where it's going to be very important for you. Because let's say you are attracting Finny. Finnies want to see other Finnies in the community. If Finny will not resonate with a community that is made up of degens or that is made up of Z Money, an X Collector will not resonate with a community made up of degens because people resonate with other people that look like them. And the number one way to filter is once you are out there giving away whitelists for your project, the types of communities you give whitelists to is going to be a direct factor to the type of people you attract into your project. If you want to attract Z Money, all you need to do is to find other communities made up of Z Money and partner with these communities and onboard these specific communities within your community through your whitelist, through your partnerships, through your brand collaborations. If you're going after Finny, finding all the communities that do this. So being very selective with who you give your whitelist spots to and not giving it to anyone that is looking for that. If for you, the long-term success of your project is having a healthy floor price that is not being undercut and is not being oversold, then bringing a community made up of Finny is your play. If you have a project for Finny and you end up attracting Z Money, what will Z Money do? Z Money is not in here for the long-term project. They're here for the short-term results. So if they see that they can make $10, $20, $50, $100 flipping your NFT, they are going to do it, no doubt. So if for you having a healthy floor price on secondary and attracting Z Money, all of a sudden that's a recipe for disaster. And that's how I've seen a lot of NFT projects pretty much kill their project the moment trading goes live because they've attracted the wrong type of community member. And you want to think if you are to draw a spectrum between high sell pressure to low sell pressure. Z money would be on the high extreme of high sell pressure. X collector would be on the low extreme of sell pressure. X collector is not here to sell, they're here to be part of something. So if they bought into your community, it's because they've seen the things that they want to see and they just want to be part of your community. They want that collectability. So where on that spectrum are you attracting your buyer persona? The second level of filtering, and this is going even one layer deeper, is just like we saw with the example of coffee. If you could put a bet on what is Leon going to drink tomorrow, he's probably going to be drinking coffee, not energy drinks. That's a bet that you can put. My past behavior is a good representation of my future behavior. And the same thing applies with the people that you bring into your community. I recently spoke with a very smart and talented Web3 founder that is launching an NFT collection. And just on the pre-sale that they did, they raised over 1,000 Solana. That's on the pre-sale from their community. And one of the things that they're doing very well is on the website, when you apply to become whitelisted, what they have in the background is they have a tool that they built in-house that analyzes your holding behavior within projects. So they can know what is the average holding time of that specific person. How often do they buy into project? How often do they interact with their NFT? Are they active holders? Are they passive holders? Do they sell for a big profit or are they happy to flip for a 10% return on their money? Do they sell the moment the floor price goes down? So all these things give them a very good overview of what is the past behavior of their holders, which is a good representation of what is the future behavior going to be. And they end up approving the whitelist applications primarily through the past behavior of their community, because they want to curate a community of people that is going to hold their project because they're building something long term. So the second layer of filtering that you can do is analyzing the on-chain behavior of your community, either by building a tool in-house, using other third-party tools, or the simplest way to do it is just using Etherscan. With Etherscan, you can take the wallet, throw it on there, and you can see how active are people. How much money do they have in their wallet? If someone has never had more than $300 in their wallet and you have an NFT mint that is $400, you can know with certainty that this person will not have the money to buy into your collection. So whitelisting them is as good as just not whitelisting them, and instead opening up that spot for someone else who might have the purchasing power. So this is a great example, looking at the on-chain behavior of your potential future holders or community members and deriving the conclusion. Do you want that person as part of your community? Do they fit the behavior type that represent your project and represent the community that you are creating? So with that, ladies and gentlemen, the three types of buyer personas that exist: the X collector, Finny, Z money, and the two ways to further filter your community through who you give your allocations to and then who you approve within your community or your whitelist through on-chain behavior. Ladies and gentlemen, my name is Leon Aboud, and it was a great pleasure sharing this time together. I shall see you in the very next video. Cheers.